Imagine for a second that you're the CEO of a major solar panel company in California. It's 2026. You've got government contracts worth billions. The green energy boom is in full swing. Your factories are humming. Your stock price is flying. You walk into your procurement office on a Tuesday morning. Your head of supply chain looks like he's seen a ghost. He slides a piece of paper across the desk. It's a notice from your Chinese supplier. Effective immediately, silver exports are restricted. Delivery delayed indefinitely. Force majeure. You stare at it. Silver? You've been so worried about semiconductors, rare earths, and lithium. But silver? That's just silver. It's been cheap and abundant forever. How could silver be a problem? Here's what you don't know yet. While you were sleeping, while the West was distracted by trade wars and TikTok bans and semiconductor sanctions, China spent the last decade executing one of the most sophisticated resource heists in modern history. They didn't steal gold from Fort Knox. They did something smarter. They bought it, all of it, and then they weaponized it. Welcome to the story of how China quietly cornered the market on the two metals that actually matter, gold and silver. How they turned a boring commodity strategy into a geopolitical checkmate. And how the West is only now, in 2025 and 2026, realizing that we've been playing checkers while China was playing 4D chess with the entire global economy. This is the Money Timeline. Today, we're going to walk through the decade-long silent war for precious metals. We'll see how China built financial armor with gold, laid a trap with silver, and is now holding the green energy revolution hostage. Let's rewind to 2015. The world looks different. Obama's president. The iPhone 6 just came out. Everyone's worried about Greece defaulting and oil prices collapsing. Nobody, and I mean nobody, is paying attention to what the People's Bank of China is doing with gold. But something changed that year. China started buying. Not flashy, headline-grabbing purchases. Just steady, methodical accumulation. Month after month. Year after year. Like a patient predator stalking prey. Let me put this in perspective. Before this, China reported its gold reserves sporadically, and everyone suspected they were lying about the numbers anyway. But now, they began reporting monthly increases. Small amounts. 5 tons here, 10 tons there. The financial press barely covered it. When they did, it was buried on page 47 next to the pork belly futures. Why this moment? Here's what was happening behind the scenes that most people missed. Russia had just annexed Crimea. The West's response? Financial sanctions? They cut Russian banks off from SWIFT. They froze assets. They weaponized the dollar-denominated financial system. And every authoritarian government on Earth, especially China, watched and learned a very important lesson. If you hold your reserves in dollars, in Western banks, in the system they control, you don't actually own anything. You're renting sovereignty. China looked at Russia getting financially strangled and said, yeah, we're not doing that. So they started building a lifeboat. That lifeboat was gold. But here's the genius part, and this is where it gets interesting. They didn't just buy gold on the open market where everyone could see, they also did something else. China is the world's largest gold producer, mining over 370 tons annually. And unlike Western countries, where private mining companies sell gold on the open market, in China, a huge chunk of domestic gold production never leaves the country. It goes straight into the vaults. So the West sees Chinese official purchases of maybe 100 tons a year. But the reality? They're probably accumulating 400 to 500 tons when you include domestic production that never hits international markets. This is financial warfare 101. You build your position slowly so the market doesn't react. You don't want gold prices spiking while you're still buying. You want to accumulate in the shadows, and that's exactly what they did over the next few years. During this period, Western analysts would occasionally write reports saying, China probably has more gold than they're reporting, and everyone would shrug and move on. The West was busy with other things. The stock market was hitting records. Tech stocks were flying. Who cares about boring old gold? China cared, and they were patient. Okay, so China's buying gold. So what? Lots of central banks buy gold. It's a reserve asset. It's tradition. What's the big deal? The big deal is why they were buying and how much they were buying, relative to everything else. Let's talk about the why first. Put yourself in the shoes of a Chinese central banker. You look at your balance sheet and you see a terrifying problem. You're holding roughly $3 trillion in foreign reserves. The vast majority of that is in U.S. Treasury bonds, dollar-denominated assets. This is the devil's bargain of the modern global economy. You need dollars for international trade. You accumulate dollars by running trade surpluses. But those dollars just sit there in U.S. bonds, effectively financing the very country that could sanction you tomorrow. You're lending money to your potential enemy. It's insane when you think about it. It's like a medieval army storing all their food in their opponent's castle and hoping they don't lock the doors. After watching the U.S. weaponize the financial system against Russia, against Iran, against anyone who stepped out of line, China decided they needed insurance. They needed an asset that couldn't be frozen, couldn't be sanctioned, couldn't be turned off with a phone call from the U.S. Treasury. Gold. Gold doesn't care about SWIFT. Gold doesn't care about sanctions. Gold can't be printed by the Federal Reserve. If it's in your vault in Beijing, it's yours. Period. So the accumulation accelerated. By the time COVID hit, China didn't slow down. They sped up. Monthly purchases jumped to 15, 20, sometimes 30 tons per month. While Western central banks were printing trillions to bail out their economies, China was trading that paper for metal. And here's the kicker. By the early 2020s, gold started hitting new all-time highs, breaking through $2,000 per ounce, then $2,100, eventually touching $2,400. Analysts in the West were confused. Usually gold goes up when there's a crisis, when inflation is spiking, or when the stock market crashes. But this was different. Stocks were fine. Inflation was coming down. And yet, gold kept grinding higher. Why? Because China, along with other central banks who learned the same lesson, was providing constant structural bid. Central banks globally were buying over 1,000 tons of gold annually. They were buying regardless of price. This wasn't trading. This was strategic positioning. Think about what this means. China now holds somewhere between 2,000 and 4,000 tons of gold, officially reported, but most analysts believe the real number is closer to 6,000 to 10,000 tons. That's more than many European countries combined. And remember, that's just what they're reporting. The real number is almost certainly higher. They've built a financial fortress, a sanction-proof war chest. If tomorrow the U.S. tried to freeze Chinese dollar assets, China could say, cool, we'll settle our trade in gold, or yuan backed by gold. Good luck. This is the first half of the strategy. Gold equals financial defense. But defense isn't enough. You also need offense. That's where silver comes in. Before we get to silver, we need to understand why China went into overdrive after 2020. Because this is where the timeline gets really interesting and really dark. Let me paint you a picture of the late 2010s and early 2020s from Beijing's perspective. The global financial system is becoming increasingly politicized. It's not just about economics anymore. It's a weapon. The U.S. puts Huawei on the entity list. Chinese tech companies are cut off from American semiconductors, software, and banking services. COVID hits, and suddenly U.S. politicians are talking about making China pay. There's discussion of seizing Chinese assets, canceling U.S. debt owed to China. The semiconductor war begins in earnest as America rallies its allies to restrict tech exports to China. Then comes the big one. Russia invades Ukraine, and the West responds with the most comprehensive financial sanctions in history. They don't just freeze Russian central bank assets, they seize them. Over $300 billion worth. They're talking about using frozen Russian money to rebuild Ukraine. Sit with that for a second. The West seized another country's central bank reserves. The sacred, untouchable reserves that are supposed to be the foundation of the international system. If you're China watching this, what do you think? You think, holy shit, they can do that to anyone, including us. Taiwan is sitting right there. If a crisis happens, if shooting starts, the U.S. could do to China what they did to Russia times 10. Freeze everything, seize everything, cut China off from the dollar system entirely. So what do? You get out. Fast. But here's the problem. You can't just dump trillions in treasury bonds overnight. That would crash the market, crash the dollar, and hurt you as much as it hurts the U.S. You need a strategy. The strategy is this. Stop adding to your dollar reserves, let them slowly decline through trade, and shift everything new into hard assets. Gold, commodities, real things that can't be confiscated by executive order. And this is exactly what the data shows. Chinese holdings of U.S. Treasuries peaked around $1.3 trillion and have been declining since, not crashing. Just a slow, steady rotation. Death by 1,000 cuts. By the time we hit the mid-2020s, they were down to around $775 billion. Meanwhile, gold purchases went into overdrive. Monthly averages that used to be 5 to 10 tons jumped to 20, sometimes 30 tons per month. The message was clear: we're diversifying out of your system, and there's nothing you can do to stop us. But gold alone wasn't enough. Because here's the thing about gold. It's defensive. It protects your balance sheet. It gives you financial sovereignty, but it doesn't give you leverage over your enemies. For leverage, you need something the other guy can't live without. Something essential. Something they need every single day to keep their economy running. You need silver. All right, let's talk about silver. And I know what you're thinking. Silver? Isn't that just shiny jewelry metal? Boring cousin of gold? Let me tell you about silver. Silver is the most conductive metal on Earth. Better than copper, better than gold. It doesn't corrode easily. It's essential, and I mean essential, for modern technology. Let me give you a list. Every solar panel needs silver, typically between 15 to 20 grams per panel. Every electric vehicle uses roughly 25 to 50 grams of silver in its electronics and battery systems. Your smartphone has silver in it. Every 5G tower, every data center, every circuit board in every computer. And here's the big one. Military electronics, missile systems, radar, all use silver. Silver is the invisible metal. You don't see it, you don't think about it, but without it, the modern world stops. The green energy transition? Dead without silver. The tech boom? Dead without silver. Your national defense? Compromised without silver. Now, here's where China was playing 4D chess while the West was playing checkers. For years, China treated silver exactly like what it looked like on the surface, an industrial metal. They were the world's biggest buyer because they were manufacturing everything. Over 28% of global manufacturing happens in China. Solar panels, electronics, EVs, all made in China, all consuming silver. The West saw this and thought, yeah, makes sense. They're building stuff. Of course they need silver. What the West didn't see was what was happening to global silver supply. Here's the thing about silver. It's mostly mined as a byproduct of other metals: lead, zinc, copper. When those metals' prices are low, mines close. Less silver comes to market. For years, silver prices were garbage. Miners weren't investing in new production. Old mines were closing. And on the demand side, exploding. Every solar panel, every EV, every new electronics factory needs more silver. But people weren't paying attention because silver prices weren't moving much. Supply and demand looked balanced on paper. But that was a lie, a mirage. Because China was quietly building inventories. They were consuming, yes, but they were also stockpiling. Private companies, state-owned enterprises, all accumulating physical metal. Western analysts started noticing something weird. The silver market was supposedly in deficit, annual deficits ranging from 100 to 200 million ounces, meaning demand exceeded supply, but prices weren't really moving. How? The answer: inventory drawdowns. The world was eating through above-ground stockpiles, COMEX inventories, London Metal Exchange warehouses, all showing declining levels year after year. Every year, less and less available silver. But it was a slow bleed. Nobody panicked because, hey, there's still silver available, right? China watched this and smiled because they knew something the West didn't fully appreciate yet. The West was about to go all in on green energy. Massive subsidies, the Inflation Reduction Act in the US, $369 billion allocated for green energy, the EU Green Deal, trillions of dollars committed to solar, wind, and EVs, all of which need silver. Lots of it. And China was sitting on the supply. Let's fast forward to 2024. The green energy boom is in full swing. Governments are throwing money at solar installations. EV sales are climbing. The AI revolution needs more data centers, all packed with silver-laden electronics. Demand goes vertical. And supply? Supply is tapped out. Here's where the timeline gets spicy. The silver market deficit went from theoretical to real. Estimates put the deficit at nearly 200 million ounces for the year. That's not a rounding error. That's a gaping hole. Inventories at major exchanges started dropping fast. COMEX registered silver inventories fell from over 100 million ounces to under 50 million within months. Refineries were running at max capacity. Premiums for physical silver over paper futures started widening. Premiums jumped from the normal 2 to 3% to 8, 10, sometimes 15%. If you were paying attention, alarm bells were ringing. But most people weren't paying attention because silver's boring, right? It's not Bitcoin. It's not tech stocks. It's just silver. Except it's not. It's the linchpin of the entire energy transition, and it was running out. Let me give you a scenario to understand how insane this is. Imagine you're a solar company executive. You've got contracts to deliver 500,000 panels per year. Each panel needs 18 grams of silver. That's 9,000 kilograms, or about 9 tons of silver annually just for your company. You go to your supplier. They tell you, we're experiencing delays, silver shortage. You think, a shortage of silver? Are you kidding me? You start calling around. Everyone's saying the same thing. Delivery times are stretching. Prices are creeping up. Some suppliers aren't taking new orders. This is when the smart people started realizing something was very wrong. Western governments were so focused on securing lithium for batteries, cobalt for electronics, rare earths for magnets. They built strategic reserves. They diversified supply chains. But silver was an afterthought. Silver was everywhere. Silver was cheap. China knew better. They had spent years quietly accumulating while the West was distracted. And now, just as Western demand was about to explode, the trap was ready. But they didn't spring it yet. Not quite. They waited for one more thing. They waited for the inventories to get critically low, for the West to fully commit to green energy spending, for factories to be built, subsidies to be locked in, political capital to be spent. They waited until the West couldn't turn back. Until solar and EVs weren't just nice-to-haves, but were legally mandated, politically essential, economically embedded, and then, in late 2025, they made their move. Late 2025. The announcement came quietly. No dramatic press conference, no threats, just a regulatory update from China's Ministry of Commerce. Effective immediately, silver exports are subject to enhanced licensing requirements and national security review. In plain English, we control who gets silver now, and we're going to be very selective about it. The market reaction was immediate and violent. Silver prices, which had been climbing steadily, went parabolic. Prices jumped from around $28 per ounce to $35 in a week, then $45, then briefly touching $50. In some markets, you literally couldn't buy physical silver at any price. Dealers were out of stock. Premiums hit 20, sometimes 25% over spot price. Let's understand what China just did. They didn't ban silver exports entirely. That would be too obvious, too aggressive. Instead, they made it bureaucratic, slow, uncertain. You can apply for a license. Maybe you get it, maybe you don't. Maybe it takes 6 months. For a manufacturer with just-in-time supply chains, 6 months might as well be forever. And here's the beautiful, terrible genius of the timing. By this point, the West had already committed. The Inflation Reduction Act money was being spent. Solar installations were underway. EV factories were built. You couldn't just stop. You couldn't pivot to a different technology. You were locked in. China had created the perfect choke point. The West needed silver to meet its climate goals, its energy independence goals, its manufacturing reshoring goals. And China controlled the supply. Remember that solar company CEO from earlier? Now imagine he's sitting in a boardroom with his CFO and his head of operations. The CFO is showing him a spreadsheet. If we can't secure silver supplies in the next 90 days, we'll have to halt production. If we halt production, we breach our government contracts. If we breach, we lose $200 million and potentially face penalties. The operations guy jumps in. I've been calling everyone. Chinese suppliers aren't answering. European suppliers are back ordered for a year. American suppliers want 3 times the normal price and can't guarantee delivery. The CEO looks at them. So, what do? We pay whatever China asks, or we shut down. Multiply that conversation by 1,000 companies across the US and Europe. Solar companies, EV manufacturers, defense contractors, electronics firms. All of them suddenly scrambling for the same resource. All of them bidding against each other. All of them at the mercy of Chinese export approvals. This is economic leverage, real leverage, not theoretical, not abstract. The kind where you call your senator and say, "Fix this," or "my factory closes and 2,000 people lose their jobs in your district." Welcome to early 2026. The scramble is on. Western governments are in full panic mode, though they'd never admit it publicly. Behind closed doors, emergency meetings are happening. The US Department of Energy, the European Commission, they're all asking the same question. How did we miss this? The answer is simple. They were fighting the last war. They were so focused on semiconductors and rare earths that they completely overlooked the metals underneath everything else. The West's playbook is obvious but doomed. They're trying to restart domestic mining, but modern silver mines in the US and Europe were shut down years ago. To bring them back online requires environmental permits that take years to secure, capital investments running into the billions, and construction timelines stretching 7 to 10 years into the future. They're also scrambling to lock in contracts with alternative suppliers in Mexico and Peru. But China's already there. Chinese companies spent the last decade buying stakes in Latin American mines, building relationships, creating dependencies. When a Peruvian mine has to choose between their longtime partner in Beijing or a desperate newcomer from Washington, the choice is obvious. Meanwhile, research teams are working overtime, trying to develop silver-free alternatives for solar panels and electronics. But that's a 5 to 10 year R&D timeline at minimum, with no guarantee the technology will work as well or cost as little. And to top it all off, Western governments are talking about building strategic silver reserves, like a metals version of the Strategic Petroleum Reserve. But where exactly are they buying the silver from? The market's already tight. Government purchasing would just spike prices even higher, hurting the very companies they're trying to protect. Every solution is too slow, too expensive, or makes the problem worse. China's 10-year head start is insurmountable in the short term. They're sitting back with their gold reserves, protecting their financial system, and their silver leverage choking Western supply chains. And here's the kicker that makes this even more diabolical. It's not just about silver as a commodity, it's about what silver represents. The future. Let's zoom out and look at what's really happening here. This isn't just about metal. This is about who controls the energy transition. The West has spent the last decade saying, we're going all in on clean energy, solar, wind, EVs. We're going to defeat climate change and reduce dependence on oil from unstable regions. Noble goal. Except there's a tiny problem. You swap dependence on Middle Eastern oil for dependence on Chinese materials. You traded one geopolitical vulnerability for another, and this one might be worse. Think about the leverage China now has. Imagine tensions over Taiwan escalate. The US threatens sanctions. China doesn't need to fire a single shot. They just slow down silver export licenses. Suddenly, American solar companies can't fulfill contracts. Defense contractors can't produce radar systems. EV factories sit idle. The green energy buildout grinds to a halt. What does Washington do? Back down on Taiwan to keep the factories running? Accept economic pain and political backlash. There's no good option. Every trade negotiation, every diplomatic dispute, every geopolitical chess move now has this unspoken threat hanging over it. China doesn't even need to mention silver explicitly. Both sides know. Cross Beijing too hard on human rights, on technology theft, on military posturing, and suddenly your critical industries lose access to the materials they need to function. Europe is even more vulnerable. They produce less than 5% of global silver supply. They're entirely dependent on imports. If China starts favoring certain European countries over others, granting licenses to the compliant and slow-walking applications from the defiant, you could see European unity fracture as nations compete to stay in China's good graces just to keep their economies running. This is the green energy choke point. The West committed to a technological path without securing the resources needed to walk that path. And now, the path is controlled by their strategic competitor. It's like deciding to become a vegetarian for health reasons, which sounds great, except you live in a town where only one grocery store sells vegetables, and that store is owned by someone who doesn't like you. You've made yourself dependent on them for your survival. That's the West's position with China and silver. And the truly frustrating part? This was entirely predictable. The data was public. The supply deficits were in plain sight. The Chinese accumulation was reported, even if buried in financial press. But nobody connected the dots. Nobody asked, hey, if we're going to build 1 million solar panels, where's all the silver coming from? They didn't ask because silver was boring. Commodities are boring. Until they're not. Until they're the difference between energy independence and energy colonization. So here we are, early 2026. China has gold reserves that make them sanction resistant. They have silver leverage that makes them essential to the West's economic future. They've spent a decade building this position, and now they're cashing in. What does the endgame look like? The optimistic case. The West wakes up finally. Emergency legislation to fast-track mining permits. Massive R&D investments into alternative technologies. A crash program to build strategic reserves in every critical material. A decade from now, the West has diversified supply chains and reduced dependence on China. But that's a decade away, and it requires political will, enormous capital, and public tolerance for higher prices in the meantime. Looking at Western politics right now, I wouldn't bet on that level of long-term strategic thinking. The realistic case, the new normal. The West accepts that China has leverage and learns to live with it. Silver prices stay elevated. Green energy projects cost more than expected. Governments eat the cost through subsidies to avoid political backlash. China occasionally uses export restrictions as a diplomatic tool, but not so often that it forces the West to truly decouple. It's a managed dependency. Uncomfortable, but tolerable. The dark case. Something breaks. A major Western manufacturer goes bankrupt because they can't secure silver. A defense contractor can't deliver radar systems, creating a national security crisis. Political backlash forces Western governments into aggressive action. Trade war escalates. Supply chains fragment. Global economy tanks. I don't know which path we're on, but I know this. China played a long game and they won this round. They understood something the West forgot. In geopolitics, resources are power, not paper currency, not financial engineering, not even military might, ultimately. Resources, the stuff you need to keep your society functioning. China built financial resilience with gold and industrial leverage with silver. They did it quietly, methodically over a decade, and now they're sitting at the poker table with a full house, while the West is holding a pair of twos and trying to bluff. The money timeline on this issue is clear. It started with quiet accumulation in the mid-2010s. The strategy accelerated after COVID and the weaponization of the dollar. The silver deficit became obvious to those paying attention recently. Then China sprang the trap with export controls. Now we're in the Western scramble phase. And the winner of this fight will control the energy future for decades to come. The question now is, what do you do about it as an individual? If you're an investor, you're probably looking at silver and gold positions. If you're a business owner in affected industries, you're sweating. If you're a policymaker, you're hopefully reading this and realizing you need to get serious about resource security. And if you're just a regular person, trying to understand why everything seems to be getting more expensive and more unstable, now you know. It's not just inflation. It's not just supply chain issues. It's a fundamental shift in global economic power, playing out in the commodity markets most people never think about. China spent 10 years building a trap using gold and silver. The West walked right into it because we were too distracted by shinier objects, literally and figuratively. The money timeline doesn't lie. When you track the moves year by year, the strategy becomes obvious. But strategies are only obvious in hindsight. In real time, they look like boring commodity purchases that don't make headlines. That's the lesson. The next economic war won't be fought on trading floors or in boardrooms. It's being fought right now in lithium mines, cobalt refineries, and rare earth processing plants. Whoever controls the physical resources controls the future. Thanks for watching The Money Timeline.